Hello, everyone. It's Tim Davis again, coming to you guys with another weekly market review. I'll try to make this one real quick because nothing's changing. And as you guys who've been following me for the past couple of weeks, as I've been trying to continue updates with you guys on my personal YouTube channel, and want to try to continue to do so. And this week, and we're going to start off with the checking the breadth of the market. So this is the tool you see on my screen now. This is a weekly chart. The tool that tracks the percentage of S&P 500 companies that are trading above their 200-day moving average. And as you can see, the momentum or the breadth of the market is still to the downside. Again, this tool, it was as high as 97%, which means 97% of S&P 500 stocks were trading above their 200-day moving average back in April of 2021. Since then, we have still been in a steady decline week in and week out. And I like to show you guys this one because I have the moving averages on here, which sets up just like the cash market of the major indices. So as the percentages continue to drop, you start to see these moving averages starting to cross. It's just no good sign of this market gaining momentum and switching back to a positive breath anytime soon. So here we show this blue line, which is my 50-day moving average, is now finally about to cross below the 200-day moving average. And normally when those moving averages cross, folks, depending on which way they're heading, up or down, these are heading down, it normally helps accelerate the move to the downside. So we had a cross of the 20-day back here. And as you can see, when when the percentages went up to the 20-day and the 50-day as they crossed, we've seen the moving averages push the action back down. And the 20-day is pointing almost straight down on a slanted angle, and you're starting to see the 20-day, the 50-day starting to follow. And you see the percentages being muted below the 20-day. So this breadth of this market is strictly to the downside. And if we look at a longer term monthly chart, the setup is starting to look the same, which makes it even more bearish. On a monthly chart, we're just starting to have the 20-day and the 50-day that's just about to cross the 200-day on a monthly chart. And when that happens on a monthly chart, we're going to really start to see an acceleration to the downside of the breadth of the market. Now, while we're talking about the breadth of the market, let's switch to my Twitter page. I'm going to show you guys what I have pinned to the front of my page, which is this WallStreetJournal.com tool. It's WallStreetJournal.com, which also tracks the breadth of the market by showing you the new 52-week highs and lows as it relates to the New York Stock Exchange and the Nasdaq. And this also helps give you a general idea of how majority of stocks are trading. So I generally check this almost every day just to give me a general idea of how many new highs and how many new lows are being created and which one outweighs the other. So this first one we're looking at, you see the two choices here, New York Stock Exchange and the Nasdaq. First one we're looking at is New York Stock Exchange, and at the top we'll see the number of new highs that were created for this past week or for that particular day. So here's the number of new highs, 23. And if we scroll down about halfway through the ratings, the results, you'll see the number of new 52-week lows, 178. So that's a huge ratio difference of new highs versus new lows. So you got 23 new highs and 178 new lows. So that is a big difference. So that lets you know that we continue to see a lot more new lows being created than new highs. Let's switch over to the Nasdaq. Nasdaq shows 32 new highs as of the closing day on Friday, Scroll down, 463 new lows. So that's not a sign to let you know that the overall market is trending downward. I don't know what else to tell you, but the new highs versus new lows. New lows is totally outweighing new highs. This is a day in and day out. It's been like this for quite a bit. So the breadth of the market is definitely to the downside, folks. So just be careful and be mindful of that. And it's not showing any signs of slowing just yet. All right, now let's start to look at each one of the indices before we head out. Before we do that, let's take a look at the VIX first. All right, here is a weekly chart of the monthly chart of the VIX, and look at that. Look at the look how this rounded bottom, as the VIX has steadily been creating these new higher lows on a monthly chart. This is a monthly chart of the VIX. Look at all that base. As you see, the volume has been picking up, and then we're starting to get like lift off on a monthly chart of the VIX. And look at the wins percentage. You can see the action is slowly but surely being favored to the upside on the VIX on a monthly chart. So that's something substantial to pay close attention to, let you know that this movement, this switcheroo in overall market, this downside in overall market is showing that it has some sustainable legs, and we could be in this trend for a while. The for stochastics on a monthly chart of the VIX is starting to trend higher as well. Okay, looking at the weekly chart of the VIX, I drew this formation for folks last week. In the weekly chart, as we can see, price action of the VIX is approaching the apex of a triangle pattern. And when you get to this apex here, something like this, we're going to have a breakout or breakdown more than likely. I almost guarantee you're going to see a breakout of the VIX, and the VIX is probably going to end up testing this previous high where we got up to about 38. Probably going to see the VIX really probably try to take off next week and get up to at least above 40 before we see some type of chance for a retreat. I say chance because we don't know what's going to happen just yet. But all we know is that the favor of the VIX pulling back is very slightly. We can the overall trend of the VIX is higher, so any pullback would be muted. And here's our daily chart of the VIX as well. And as you can see, we got as high 38.94 back at the end of January. Price came back down right to the moving averages, and now we're starting to see price starting to trickle higher again, and a possible breakout that is brewing. Okay. Now let's go straight to the S&P, which is the opposite of the VIX. And here's let me go to a yearly 1-year chart of the S&P. And as you can see, S&P broke out of this channel. See these white channel lines that I have drawn here. Broke out of that channel. Now the new channel is trending downward, and it's just been following that to T. And you can see again, as these moving averages, here's our 20-day moving average crossing below the 50-day moving average, and that was back towards the end of January. And we got that cross. You see this acceleration to the downside, and then a attempt to rally back up, only get stopped right at the moving averages, right at the 50-day. Challenge the 50-day a couple times, and now I'm starting to see price action is being pushed back towards the 200-day, and then we're starting to break the 200-day. The next cross we see, start to see the on this S&P 500, see the 20-day cross below the 50. That's going to accelerate the move to the downside, and continue to push price lower and keep price muted below the 20-day. And then the next move to see happen is the 50-day cross below the 20-day, and that will also spark another acceleration to the downside. S&P, let's take a look at the Dow Jones. Here's a daily chart of the Dow Jones. Same type of scenario. We finally got that real big push below the 20-day. We got the crossover of the 20-day crossing below the 50-day. And you see this acceleration here to the downside, then a bounce back up once we hit the got below the 200-day, a rally back up, only to be stopped by the 50-day, trade around the 50-day for several days, and then we're starting to see Reversal back to the downside with the 20-day moving average starting to point down again. Looks like it's ready to make an attempt to cross below the 200-day, which would probably in turn have the 50-day start to follow. Once the 20 crosses below the 50, the 20 crosses below the 200-day, we can see another acceleration, another leg accelerated to the downside. And then once the 50 cross below the 200, we'll probably see the same. Switch to our Nasdaq. Nasdaq is the weakest link of the three. See, again, we got that big crossover of the 20-day below the 50-day back in almost the middle of January. And look what happened. Acceleration to the downside, big acceleration. And then a move back up, but this move was really muted. Price accelerated down below the 200-day moving average. Rally back up to only be stopped right by the 200-day, and price pretty much got muted there. Could not break that 200-day ceiling. And now look at this. This even look more detrimental. We are now starting to have, before the other two, the 50-day about to cross below the 200-day on this daily chart of the Nasdaq. So look for the Nasdaq stocks to really start to accelerate to the downside probably sometime next week. And if I was to switch this to a weekly chart, you can see where the 20-day is getting very close to a cross of the 50-day on a weekly chart. So this market is still in a lot of trouble, folks. And what about the Russell? Here's a weekly chart of the Russell. Look at that. The 20-day moving average on the weekly chart of the Russell is just about to cross the 50-day. So that's a definite, acceleration to the downside. That's probably about to pick up on Russell for another leg down. Here's our daily chart of the Russell. We see where we got the actual crossover of the 50-day below the 200-day back around the end of January. So that pretty much is keeping price muted below all moving averages now. So now it's like the 50 has become a strong area of a strong area of resistance. It's like price actually attempted to rally back up to that 50. Now it's like it's just been muted right below the 50 before the next downturn. It's like we're probably going to be seeing the next downturn very soon, which will probably end up breaking this previous low of 1901. We're probably going to break that in the near future. All right, that's our Russell. Now let's take a look at gold and silver real quick before we end this video of the market review. And you just see the opposite with gold and silver. Look at that. Look at this gold chart. It's in overbought territory now, so I would not be surprised to see some type of pullback or just some type of consolidation. But we're back up to 1900, folks. We haven't seen that level in a minute. Back up to 1900, you see price action is well above the moving average, and you have the moving averages going upward instead of going downward like the overall markets. That's a positive sign for gold. Look at our weekly chart. Starting to see a breakout of a triangle pattern that I've been watching for the past year and a half. On a weekly chart, we're getting that breakout. That's a positive move for gold. We could see gold prices continue to move higher throughout the course of the next several months, maybe in the course of this year. So that is the movement of gold. And one more movement of silver. And silver has really not gotten off the tarmac. Yeah, I call it the tarmac. It's not gotten off the tarmac yet. Still hovering right on the weekly chart, right at its 50-day moving average, but it's found a nice base. See, it's been building this base since August of last year. It's been building this nice solid base above the 200-day, looking for a chance to begin to launch off of this launching pad on the weekly chart. So gold and silver is setting up pretty nicely for moves to the upside. Here's a 1-year daily chart of silver, and we see how it's back up on the daily chart to make a challenge to break above that 200-day. So gold and silver setup is looking very quite well, considering what we're seeing in the overall markets, and that this moving gold and silver might continue with all what's going on in our economic on the economic side of the overall market throughout the year, and the political front, and the global tension that's going on across the world. Here's crude oil. Crude oil has pulled back here recently. It's like it's being held up by its 20-day. Let's see if that continues to hold up over the next week or two. That's on the daily chart. Looking at our weekly chart of crude oil. It's like we came up to this level around 95, and looks like we're trying to start to pull back a little bit here. So we have to see how that pans out. But the trend is still higher. So we could see some more pullback here, but it may get found some support on the weekly chart at one of these moving averages, or this level of support right here, which is around 85. So we could see it move back to 85, and then we can probably find some support and go higher. All right, folks, that is my weekly market review. Hopefully you guys understand what showed you from a technical aspect. And as you can see, the overall market, the overall economy is still showing a lot of weakness. So this could be with us for a while. So trade carefully. Until next time, this is Tim Davis signing off, and you guys enjoy the rest of your weekend, and I'll catch you guys next week.